Are you worried, just like me, that your CTC never matches your net take home? Most of the salaried people in India are perpetually confused because their CTC never matches their net take home. And whenever they open their pay slip, they realize that company ने तो हमारी काट ली tax. No worries. Today I am going to show you how to pay zero tax on a CTC of 12 lakh rupees. So let's get started. Hi everybody. So before we get into details, we need to understand tax exemptions and deductions. They are not the same thing, but they are similar. What are tax exemptions? Income tax exemptions are provided on a particular source of income, but not on the overall income. For example, income from agriculture is exempted under tax, but you are not a farmer, so it's not important for you. What is important that what are the components available in your salary that are exempted from taxes. So there are a lot of components. One of them are called HRA, house rent allowances, which can be claimed under income tax exemptions. Now what are deductions? Deductions can be claimed on the overall income. Certain specified investment and expenses are considered under tax deduction. For example, investment in equity linked savings scheme, your insurance premium towards your health, your insurance premium towards your life. There are other things also. So these are the components which can be calculated under deductions. Now let's understand that there is a formula which is called taxable income and net taxable income. What is the taxable income? Your taxable income is equal to your gross income minus your exemptions, and your net taxable income is equal to your taxable income minus your deduction. So if you take maximum exemptions, automatically your net taxable income will come down. But if you are not able to optimize your exemptions, no matter how much deductions you take, ultimately your net taxable income will be higher. So key is the optimization of your exemptions, right? Next thing, let's look at the CTC structure in India. In India, your gross income is equal to your basic plus HRA plus your other allowances. Now HRA and other allowances are exempted from tax under certain terms and conditions, whereas the basic is fully taxable. Now hearing this, you might think that why to take basic then? We can just discuss to our HR and we can take entire money in HRA and other allowances. Hold on. You might be smart, but the governments and the officials are smarter. As per government wages rule, minimum 50% of your CTC has to be given as a basic. If your CTC is 12 lakh rupees, your basic has to be minimum 6 lakh rupees. So don't be so smart. Government is smarter. Currently there are two methods available to calculate your tax. One is called old tax regime and another is called new tax regime. Now the old tax regime, you can claim all the exemptions and deductions, whereas in the new tax regimes you do not have all the exemptions and deductions available. What you have is the tax slab, number of tax slab available more than the old tax regime. But one thing you need to note that once you opt for new tax regime, after certain year you cannot come back to old tax regime. So you need to be very cautious and smart enough to choose which tax regime you need to follow. So we will discuss about this. Let's go to the Excel and find out that which tax regime is suitable for you and how you can pay zero tax on a CTC of 12 lakh rupees. So here comes our Excel sheet. As I said earlier, that currently we have two options to calculate our tax. One is under new tax regime and one is under old tax regime. So we will see that which tax regime is beneficial for you. Now let us look at what are the tax slab available for new tax regime as well as old tax regime. Here you can see for new tax regime there are almost 6 tax slab available: 5%, 10%, 15%, 20%, 25% and 30%. Whereas for the old tax regime there are only 3 tax slab available, which is 5%, 20% and 30%. Now you might be thinking that new tax regime is beneficial for you because there is so many tax slabs. We will see and we'll calculate and we'll see which is beneficial for you. But let us understand that for the old tax regime, you can claim all the deductions and exemptions. But if you opt for new tax regime, you cannot claim any deduction and exemptions, right? So let's take an example. Let's take that your CTC is 12 lakh and how your taxable income will be under new tax regime and the old tax regime. So in the new tax regime, your gross total income is your taxable income, since you are not eligible to take any of the deductions and exemptions. But for the old tax regime, assuming that you have opted for basic deductions and exemptions, which is deduction under 80C, under which you have invested 1.5 lakhs toward ELSS scheme. Let's assume that, and 50,000 you have taken towards LTA and medical insurance. Another 50,000 you have invested towards national pension scheme, and 1,50,000 you are paying towards your rent, which comes under HRA. So if we calculate your taxable income under old tax regime, sorry, your net taxable income under old tax regime comes under how much? 8 lakh rupees, whereas for new tax regime it is 12 lakh rupees. Now let's calculate what will be your tax liability here. As tax lab suggests, for first 0 to 2.5 lakh there is nil tax for both old and new. Next 2.5 lakh to 5 lakh it is 5% for both old and new, so 12,500, 12,500, right? Next 2.5 lakh, which is 5 lakh to 7.5 lakh, it is 10%, which comes at 25,000 for new tax regime. Next 2.5 lakh, which is 7.5 lakh to 10 lakh, it is 15%, so your tax comes 37,500. So you are left out with only 2 lakh rupees. Next 2 lakh rupees is 20% tax, which is 1,40,000 rupees, sorry, which is 40,000 rupees. So your total tax under new tax regime is 1,15,000 rupees. Now let's see in the old tax regime. As I said, first 2.5 lakh is nil, next 2.5 lakh is 5%, which is 12,500. Next 2.5 lakh is 20%, which is 50,000. You are left out with 50,000 in hand, which is again 20%, which is 10,000 rupees. So here you are paying how much total? 72,500 rupees. So if you are calculating your tax or opting for old regime, net on a CTC of 12 lakh, you are saving 42,000 rupees rather than going into the next tax slab. But the idea is to bring it so low that you don't have to pay any tax on a CTC of 12 lakhs. So let's go to the another sheet and let's see how we can pay zero tax on a salary of 12 lakh per annum, which is cost to the company. Now, as I said earlier, CTC structure in India is such that your basic salary is minimum 50% as per government rule. So if I apply minimum 50% of your basic salary, which means 12 lakh of CTC, your basic salary is 6 lakhs, which is a taxable income, right? Now let's calculate your HRA. For HRA calculation, there are two rules. Rule number one, it says that for metro, it is, if you are staying in a metro, your HRA is 50% of your basic, which is 3 lakhs rupees over here, and for not metro, which is 40,000 of your basics, which is 2.4 lakh rupees over here. Rule number two says that your actual rent minus 10% of your basic is your HRA. So you need to calculate both rule 1 and rule 2, and whichever is less will be considered your HRA component for exemptions. Now let's assume that you are paying 4,20,000 rupees towards rent, which is 35,000 in a month. So your rule number 2, if we calculate your actual salary minus 10% of your basics, comes 3,60,000 rupees you are paying towards rent. But which is lower over here? Assuming that, let's also assume that you are not staying in a metro, you are staying in a non-metro like Bangalore city. So which is lower here? 2,40,000 rupees. So that will be your actual HRA for exemptions. Now let's come here, which says that your salary or your CTC is 12 lakh, right? Now what is your taxable income as per formula I said earlier? Taxable income is your gross income minus your exemptions. Now what are the exemptions you have taken? HRA, housing allowance, which is 2,40,000 rupees as we just calculated. leave and travel allowances. This is also a part of your salary component, but this portion is kept aside and it is only given when you submit the bill for travel allowances. For example, within India, if you go with your family or individually for a leave, then whatever the flight fares, train fares, bus fare, if you submit, the exact actual amount will be given to you out of your LTA amount without deducting any taxes, right? So let's assume that LTA you have taken 50,000 rupees. Now food coupon is also a part of your salary component. Nowadays lot of company give food coupons because so that employee can maximize their taxable income, right? So lot of company gives Sodexo or Jita cards. So don't think that company is paying from their pocket. It is part of your CTC. Rule says that 50 rupees per meal you can give to an employee. So in a day 2 meals, which is 100 rupees. In a month 22 days, it means 2200 rupees. In a year it comes to 26,400 rupees. So I have taken over here the basic exemptions. I have not taken much exemptions apart from this. So HRA 2,40,000 rupees, LTA 50,000 rupees, and food 26,400 rupees. So how much your taxable income over here? It comes 8,83,600 rupees. Now the rule says what is your net taxable income? Net taxable income is your taxable income minus your deductions, right? So coming to the deductions, over here government flat give 50%, 50,000 rupees deductions, whatever is your taxable income. So here we have applied 50,000 deductions. Professional tax also comes towards 200 rupees per month, which comes 2,400 rupees. Assuming that you have taken an insurance for yourself, health insurance, which comes to you are paying a premium of 25,000 rupees. So I am considering it over here. Assuming that you have also taken an insurance for your parents, and since parents are aged, premium is normally higher, so I have considered a 30,000 rupees insurance premium you are paying for your parents' health insurance. Now coming to the investment under ATC, as I said that there are a lot of instruments which you can invest under ATC and claim the tax benefit, but the upper limit is maximum 1,50,000 rupees. You can, and in this it comes your equity linked savings schemes, your PF, your life insurance policy, and a lot of other things. I am assuming that you have invested all your money in equity linked savings schemes, which is, and this is you have taken the upper limit of 1.5 lakh. Next deduction comes under national pension scheme, where government also allowed additional 50,000 rupees if you invest in 50,000 rupees in national pension scheme, which is also a great tax saving instrument and a great retirement plan instrument. We are not going in details of all this instrument. I am just assuming you have invested another 50,000 rupees in NPS and you are getting a benefit of tax deduction. Now if you calculate right now net taxable income, which is your taxable income minus your all the deductions, which is 3,74,000 rupees, your net taxable income comes 5,76,200 rupees. Now on this, if we apply the tax slab, as rule suggests, first 0 to 2.5 lakh rupees there is no taxes. Next 2.5 lakh rupees, it is 5%, which is 12,500 rupees. Remaining you have 76,200 rupees. If you apply 20%, it comes 15,240 rupees. So total tax you are paying 27,740 rupees. Now till now your taxable income has not come to zero at all. So how do we do that? So idea is to bring your net taxable income up to 5 lakhs or less than 5 lakhs. Why? Because government says that if your net taxable income is up to 5 lakhs or less than 5 lakhs, then you apply a rebate and you can have a zero tax on entire amount. But if your net taxable income goes even 5 lakh 1 rupees, so you need to pay tax on the total 5 lakh 1 rupees, calculating in this manner slab wise, right? So idea is to bring your net taxable income below 5 lakh rupees. How do you do that? We have already taken our maximum exemptions and deductions. Here comes the tricky part. You are already paying a rent of 35,000 per month, which is 4,20,000 rupees, but your HRA is only considered 2,40,000 rupees, right? So how we can maximize it? We can maximize it just tweaking our basics. Let's assume that instead of 50% of your basic, let's make it 66% of your basic. So how much your basic salary right now? 7,92,000 rupees. Look at here, everything changes. Right now, what is your HRA? 3,16,800 rupees. Rule number 2 is 3,40,800 rupees, which is lower 3,16,800 rupees. So here comes your HRA 3,16,800 rupees. We have not made any changes. Let's see what is your net taxable income. Your net taxable income is 4,99,400 rupees. Now, right now, if you apply the rebate, your tax will be 0. So that's how, if you do little bit of simple tax planning and little bit of tweaking in your salary structuring, CTC structuring, you can make completely 0 tax on a CTC of 12 lakh. That's all from today's video. If you like my video, kindly hit the like button. Do subscribe us. Jai Hind, Jai Bharat.